Hi, I'm Tom, Chief Economist at Barber ABI. A very warm welcome to June's update on what's going on in the construction and planning environments. The planning environment appears to have caught up with wider sentiment and leading indicators, with the lower trajectory seen in April maintained in May. Contract awards increased monthly by 20% to 5.6 billion, which was right on the long-run average but subdued compared to the recent past, while the earlier planning stages also remained weak. May was a strange month for contract awards, with the opposite of the recent trend. Residential and commercial sectors saw a welcome bounce while other sectors suffered. The residential sector continued to seesaw between higher and lower levels, increasing by 74% month on month to 2.4 billion, while activity in the commercial sector also continued with 900 million, the third month in a row of above average levels. Elsewhere, the industrial sector suffered a disappointing 37% fall, and the infrastructure sector also seems to be on a new lower path, with the second month in a row below 1 billion. The last time this happened was back in 2021. As mentioned above, weaker activity continued in earlier planning stages, with planning approvals just 6.1 billion in May and applications 7.4 billion in April. Approvals have fallen since the start of the new financial year. Residential remains very weak, with just 2.7 billion of approvals, down from 3.4 billion per month over 2022 and the start of 2023. Infrastructure also appears to have fallen, with 2 poor months in a row. Bad news, as the sector has been holding up the whole industry over the last year. The only two sectors at or above average levels in May were the industrial sector with 900 million, consistent with 2023 levels, but down from 1.3 billion per month over 2022, and healthcare, which saw 300 million, but that was thanks to a single large project. Finally, for planning applications, 2023 so far has fallen by around 15% compared to the whole of 2022, and 25% compared to the last quarter of 2022. The residential sector continues to suffer the most, but also infrastructure has fallen more recently. Thanks to its recent strength, it remains only somewhat below the long-term average. Positively, the education sector had its best month since October 2020, with 500 million, and the hotel and leisure sector rose by 73% to 800 million. So, to summarise, May provided further evidence that we're in a lower trajectory, which is not surprising really given the strength of the recent pipeline, coupled with the uncertainty and constraints the industry is burdened with. In addition to the residential sector, of particular concern is the recent lower activity in infrastructure, which has been masking the weakness of the commercially sensitive sectors. Thanks for watching. As always, if we can help at all, please do get in touch. All the very best.